Well, staying on the China beat, consumer spending pointing to further deceleration. The latest government data from Golden Week, that's an 8-day holiday pegged to China's National Day, point to spending increasing 9% from a year ago. It is a pickup in pace from August, but it indicates a less than 3% growth a year since the start of the pandemic. For more on China's economic picture, let's bring in Dennis Unkovic, partner at Meyer, Unkovic and Scott. Appreciate you joining us today. Let's start with what we have seen play out from Golden Week. Important to note for those who are not as familiar, this is one of the more lucrative holidays. The data points to people traveling and spending, just not as much as the government had projected, and certainly not a massive increase if you consider it to 2019 levels.
When you're looking at either 2019 or 2022, a 9% increase is really nothing. This is a period when the Chinese people love to get out, love to visit family. And I think that this is a disappointing at best statistic.
What does that tell you about where consumer sentiment is right now?
I think that the Chinese economy is in probably the worst position that I've seen it in memory. A third of the Chinese economy, as you know, is based upon real estate. The real estate is totally, I don't even have a word for it, but it's so depressed that a third of the Chinese economy is now based upon real estate that's in free fall. I think there were some reports yesterday and today about Country Garden, which is one of the largest private real estate developers in China. They owe about $187 billion, and it's come out in the last several days. They're not able to pay people. What's really important, I think, is in the real estate market, if you want to buy a house, you order it ahead of time and you put money down. Sales have dropped for Country Garden 80% year on year to today. So the fact that they owe $187 billion or $200 billion, if they can't pay, I sort of see Country Garden as like the, I don't know what the expression is, a canary in the coal mine about what's happening in China. Because if a third of your economy is really depressed, and the Chinese people are not putting money into real estate, which they're not. The fact that the Chinese government has said we're going to spend another $180 billion on infrastructure projects, I think is really not going to have much of an impact.
Dennis, let's put that in context, though, because we have already seen Evergrande default on its debt. Sunak China, same thing. But Country Garden, in some ways, raising even more alarm bells because this was supposed to be the good actor, right, in this space where we have seen so many companies taking on debt. The fact that Country Garden now missed one of its debt payments and is now saying they are in a serious condition here where they may not be able to repay, they may potentially default. What does that tell you about the severity of the real estate collapse that's playing out?
What really worries me, great question, is that Country Garden was building apartments, houses everywhere in third and fourth tier cities in China. And that's how it got all of its money over the last couple of years. It was really the one everybody said, well, Country Garden showing what to do. When you look at China, when you see the problems with the economy, putting Shanghai and Beijing and Ningbo aside, those third and fourth tier cities are where a lot of these empty apartments are. And that's where Country Garden's been getting its money. So when you see their sales dropping 80% over a 12-month period, year on year, that's really shocking. I don't think they will find enough money to deal with the situation. And when you go to the equity markets, look, you mentioned Evergrande a minute ago. Evergrande at its height owed about $300 billion, but that stock has plummeted 99%. Well, what do you think is going to happen with Country Garden when they replace Evergrande as the canary in the coal mine?
How does the government restore confidence in the space? When we have seen a number of measures, whether that is cutting rates on existing mortgages, reducing the minimum down payment that's required, they're still not seeing investors coming back to the market. So what will it take to essentially prop up the market from where it is right now? So when I say the market, specifically the property market.
Well, I think it's even worse than we've said. I'm sorry to be so negative, but there was the three red line policy. The Chinese government, as far back as 2020, said, whoa, there's too much money going into these companies. Private banks don't lend the money. So what happened then in China, they have what are called shadow banks. And the shadow banks will lend money. For example, if a bank would pay you 1.5% on your savings, the shadow bank will say, look, I'll pay you 6% on your money. They then lend out money to people like Country Garden and Evergrande at 10 and 12%. Those shadow banks are now having problems because they're not getting paid back. And so the individual Chinese person who has put all or a significant part of their savings in what they're sometimes called trust banks aren't getting repaid. One of them is an example of Zhongrong is one of the bigger ones that's out there. So the Chinese government, I don't think, is able to solve this problem at this point. Lowering the interest rate, so maybe you'll buy a house because it's 25 basis points more. I don't think that's enough. And you put your finger on what is, I think, the really key issue. Can the Chinese government solve this problem? If it bails out the Country Gardens and the Evergrandes, it can, but that might cost $1 trillion. And the Chinese have just said, well, we're gonna increase infrastructure building. That does not address the basic problem of, will the average Chinese person put more money into real estate? I think the answer is no.
Well, that points to a further gloomy outlook for the world's second largest economy. We'll be watching closely. Dennis Unkovic, a partner at Meyer, Unkovic and Scott, appreciate your insight today.
Thank you.